I am Dr. Manoj Kumar NV, working as an Associate Professor in the Department of Management Sciences, Maharaja Institute of Technology, Mysore. So today we are discussing about the role of commercial banks in socio-economic development. So the subject entitled Banking and Financial Services, the subject code is 18 MBA FM 301. So in the previous class, we are discussed about what are all the functions of commercial banks. So today, we are going to concentrate on what is the roles of commercial banks towards social economic development. So here we can notice that there are more than 7 points were there where we can notice here. The first one is capital formation. So the capital formation, when we are consider the capital formation, it is one of the major and important consideration to any enterprises where they can easily raise the capital funds for them. So therefore, whenever we are doing the business or whenever we are concentrating towards with respect to socio-economic development, where the bankers are placing a major role with respect to start up the business, or it might be they are going to consider that as one of the entrepreneurs, like they can able to get whatever the amount which is required to raise their initial cash flows. So therefore, when we consider the capital formation, the commercial banks plays a major role towards raising the funds to the business operations. Where when we consider the capital formation, bank plays an important role in capital formation. It might be a short-term funds or medium-term funds or long-term funds, which is most essential for the economic development of the country. So when the easiest way that our easiest source which is available to start up the business entities by providing the financial services, financial assistance, and whatever the financial requirement, if they are reached very easily, surely there will be a chance of more industrialization, more economic development. So therefore, they mobilize all small savings of the people and scattered over a wide area through their network of branches all over the country and make it available for productive purposes. So as we know, it will be collecting from the large group of the people, and they are going to collect all the small investments, so small amount of savings. So therefore, these savings, all small amount of the savings going to be mobilized, and that scattered, whatever the scattered people we have, we are going to mobilize the funds from them, and that funds is going to be making into more productive investment. So therefore, as investors, as depositors, they also have a chance of getting a better returns for their investment rather than they are just keeping that with them. So therefore, instead of they keep it with them as a reserves or as some other investment they are going to do, the banks are going to be given a secured interest. So therefore, they can able to believe the banks to make an investment. So therefore, for any business in the context where it will be given more capital formation source, so therefore they can easily raise the debt by producing the valid documents. So therefore, it is given a chance to any entrepreneur, any sort of entrepreneur, they can able to easily raise the required capital through the commercial bank. So therefore, majority of the business depends on the commercial bank's operations. So therefore, in case of any company or any small entity, or it might be a large scale business, every business they are move or they do transact on the credit basis. So therefore, whenever they need a short term requirements, immediate cash is not available, at the time they go for the bank to make a claims regarding to that, or to do the make a payment of salary, to meet the regular expenditures, that also will be raised through commercial banks. So therefore, here we can notice that where the capital formation with respect to long term, also it is going to be generated well, as well as it is concentrating towards providing the long term services. Then when we are looking to these things, the second point is creation of credit. So creation of credit, it will be happen when the banks create credit for the purpose of providing more funds for the development projects. So any infrastructure projects, you can take it as an example, or you can take the things as like if you take a consideration of any infrastructural development projects or any government projects, those are need huge amount of funds. Even as a company, whenever I need a technological advancement or any improvement in the fixed assets or financial assets, at that time I need a large amount of cash which is required to meet the obligations. So at that time, the bankers are ready to provide the credit, because they are creating the mindset with the customers or with the investors that they are always motive towards increasing in the saving mindset of the individual. So therefore, when the saving mindset is increased, obviously it is going to be resulted with increasing the amount of deposits. When the amount of deposit is high, obviously it is going to be resulted with there is an increase. When there is an amount of deposit increase, it will be increase the credit creation by the commercial bank. So therefore, it is tap on the enhancing the by providing a motivational tools to increasing the deposit rates, or increasing the mindset of the individual with respect to giving a proper return or proper right investment plans. The commercial banks are encouraging towards the common people to make more deposits. So by making by taking the more deposit from the investors, the commercial banks are increasing the base of credit. So therefore, increasing the credit base, that will make the banks are ensure that they have a more credibility. So therefore, they can able to give any sort of the loan, whatever the requirement which is needed. Then coming to the third point, where channelizing the funds into investment. So banks invest the savings mobilized by them for productive purposes. So just take an example, instead of I investing or I make a deposit in the bank, I just keep it myself. So then what happens? It is not going to yield anything, any returns it is not going to yield to the investor. So therefore, instead of keeping as a debt cash, better to make that into productivity or productive investment. So therefore, the capital formation is not only the function of commercial banks. Pooled savings should be distributed to the various sectors of the economy with a view to increase the productivity of the nation. So here we can do the regional balance, we can do equality, where we can able to concentrate on each and every aspects of the business, each and every corner of the business, and we can able to reach different geographical region by having a channelizing the funds into investment. So therefore, this is going to be helpful. This is going to be helpful. This is going to be helpful to the banker to getting more returns in terms of interest. Also, they given a opportunity for the entrepreneurs towards by creating more credit facilities, they are encouraging to the industries. The fourth point is fuller utilization of resources. So as we know that sometimes the organization, they are scarce with the capital formation. whatever they are required, that much cash is not enough with respect to particular companies. So therefore, whatever the savings pooled by the banks are utilized to greater extent for development purposes of various regions in the country. So therefore, we can do the regional imbalance, we can avoid the regional imbalances by fuller utilization of resources through whatever the capital formation and credit creation by the commercial banks. Also, it is ensure the full utilization of resources. So therefore, when we are going to use the fuller utilization of resources, it is going to be yield better for the company. And coming to the fifth one, where we are concentrating towards encouraging right type of industries. As I said, the banks help in the development of the right type of industry by extending the loan limit to right type of the persons. So in the way they help not only for industrialization of the country, also for the economic development of the country. So therefore, it is a rational decision of the bankers that they are going to find the capable person or capable entity towards encouraging them with respect to coming with the betterment of the particular companies or businesses. So therefore, it is one of the mode of motivation where the individual players, they are getting encouragement by the commercial bankers towards go with the right industry. There might be sometimes they are going to cut down the rate of interest, liberalizing the policies and providing whatever the financial tools they are required, all the things that is going to be makes the country into more economic stability. So the grant of loans and advances, to manufacturer who they have the products are in general demand, like there is a demand always will be very high and the demand will be have a perpetuity. So those kind of manufacturer those kind of manufacturing turn their products introducing new methods for production and assist in national income of the country. So therefore, sometimes as a new entrepreneurs, as a new industry or as an existing player, whenever they are focused with respect to usage of advanced technology or go with the better research and development activities, taking a new projects and new ventures, those are going to be benefited with whatever the full-fledged with respect to the encouragement to the new type of industries. Then coming to the next one, that is bank rate policy. So as we discussed in the previous class and all, so economists are of the view that by changing the bank rates, so it might be banker rate policy, it might be CRR, cash reserve ratio, statutory liquidity ratio, they have a choice of changing the business rate. The changes can be in terms of money supply of a country. So therefore, in our country, as we know that the supervisory bank is RBI, they are going to be regulate the rate of interest to be paid by the banks for the deposits accepted by them, and also the rate of interest which they are going to be charged by them on the loans and advances are granted by them. So therefore, RBI working as a main authorized body, regulatory body, supervisory body here towards controlling the rates, interest rate with respect to the loans taken by the commercial banks and given to the RBI, or RBI taken a loan from the commercial banks, that we are discussing in the next upcoming classes as a repo rate and reverse repo rate. Also we have a interest rate like deposit rate and lending rate. These are the rate that is going to be decided and guided by the RBI. Then bank monetize debt. This is one of the most important thing where the commercial banks transform the loan to be repaid after a stipulated periods. So into cash which can be immediately used for the business activity. So therefore, if when we take a consideration of any commercial banks, whatever the loan they are given, that will be in terms of cash. So therefore, any whatever the stipulated time period, we can able to repay the particular loan. And manufacturers and wholesale dealers and intermediaries cannot increase their sales without selling a goods on credit basis. I already said, nowadays if you take an example of any businesses, those businesses are doing a business based on credit. So therefore, when they do the credit based business, obviously they have a short of funds, they are not have a sufficient funds to do the operation. So therefore, but whatever they do the credit sales may lead to locking up of capital, because they are not going to get any income out of whatever the operations they are done. So therefore, as a result, production may also be reduced, because short of funds, it is not allowed to go for better procurement. And as banks are lending money by discounting bills of exchange, this is the one which is greatest mechanism which is the commercial banks are rendering to the common people, or we can call it as a corporates or business people, where they are going to get the benefit of discounting of bills, because whatever the time period which is have a restriction towards getting the payment from the banker, as a once we get the future date check, we must need to be wait for the certain time period to collect the cash. But whatever the we have a discounting of bills, so therefore by using the discounting of bills, we can able to produce the whatever the future date check today itself, and we can able to claim the value less than the check. So because they are going to be cut down, whatever the processing charges or commission they are going to be claim, or discount they are going to be claim on it, they are going to claim the discount, and remaining value they are going to be circulated to the creditors. So therefore, whenever we do the business on credit basis, bills of exchange and discounting of bills plays a vital role in the particular businesses. So therefore, the business concern are able to carry out the economic activities without interruption with the help of discounting of bills through bank mobilized debt. Then coming to the next point, where finance to government. So government is acting as a promoter of industries in underdeveloped countries like India, for which the finance is needed for it. So banks are provide such a long term credit to government by investing their funds in government securities, and also short term finance by issuing or purchasing treasury bills. So here we have two things. One is how commercial bankers are helped to the government in long term and in short term. In long term, they are concentrating towards whatever the government bonds issued by the RBI. The commercial bankers, they are going to keep themselves as a reserves, or they are going to limit themselves to make more securitization. They limit themselves to not to give all amount, whatever the deposit amount they are collecting, all 100% amount they are not going to be issued it as a loan. They kept some reserves with them. Statutory reserves are there and general reserves are there. So in case of statutory reserve, they can keep that statutory reserve as a CRR. They must need to keep that cash reserve ratio with the RBI. Whatever the amount of cash they are collecting, out of 3% of the amount they must need to keep it in the RBI. And SLR, they must need to be keep themselves statutory liquidity ratio, they are going to create it, and that amount, that proportion will be keep it themselves. So remaining amount only they are going to be utilized for providing loans to the common people. So therefore, so these whatever the SLR part, the banks are ready to invest whatever the SLR part which is left out, that amount instead of they keep it themselves as a dead investment, if they do the investment or if they do the investment on government securities, it is going to be yield very good returns to the particular investment. Even the bankers may also have a profits on whatever they are keep it as statutory liquidity ratio. And secondly, the government, whenever the government need less cash flow in the market, so if it is over cash flow in market, what happen? The consumer buying behavior may take in the wrong direction. Even though whatever the price increase, he is ready to buy because more cash is flowing in the market. So at that time, to avoid such situation, the RBI, they are going to be issue the treasury bills. So these treasury bills are the short term instrument where have a high value of investment. You must need to do it to purchase the treasury bills. So therefore, by purchasing the treasury bills, the commercial banks, they are going to be make an investment on invest, and those investment will be going to be benefited to the government to meet the short term requirement. Whenever the government faces the short level of cash flows, very less cash flows, are when they are financial need, at the time the government and RBI, they discuss and they go for issuing a treasury bills to collect the more cash. So even the tool which is going to be helpful to control the excess cash flow in the market, as well as for the government, whenever they need a cash or then whenever they need a funds, they can issue the treasury bills and they can incorporate with whatever the sufficient funds they are required. They can easily get the sufficient funds from the even from the commercial banks. Then the commercial banks, they are considered to be a banker as employer. So here, after the nationalization of big banks and banking industry has grown to a greater extent, banks branches are opened in almost all the villages, which leads to the creation of greater employment opportunities. Banks are also improving the people to occupying various posts in their office. So as you know that whenever there is a recruitment call from the banks, it will be in the number of thousands. So therefore, the bankers, they are creating enormous job opportunities, job enlargement, job enrichment, which is taken place in the very smoother way and very transparent system, and anybody they can able to clear and they can able to go for the bank jobs. So therefore, banker as playing as an employer by creating jobs, and they are going to be given an enormous job opportunity. Through that, they are going to be increase the standard of living of the individual lives. So therefore, the commercial banks helpful to improve the standard of living and improve the national income, and it is also contributes toward socio-economic development. So therefore, individual purchasing power will be higher, the standard of living will be higher. When the standard of living is high, obviously the environment is going to be grown and developed. So therefore, that will be leads to national development. Then coming to the last one, where we can concentrating towards bankers are entrepreneurs. Bankers are entrepreneurs. We can see that in recent days, banks have assumed the role of developing entrepreneurship, particularly in the developing country like India. So developing of entrepreneurship is a complex process, because once we are motive them, they couldn't be a entrepreneurs unless whatever the facilities they required, whatever the encouragement they are required, whatever the benefits they need from the government, from the banks, or from the intermediaries, from the financial institutions. So therefore it includes, because that's why they used to call it as the developing of entrepreneurship is a complex process, because it includes the formation of project ideas, identification of specific projects, because specific projects, when you go for specific project, it is going to be yield very good revenues or very good income to the companies, suitable to the local conditions, inducing the new entrepreneurs to take up these well formulated projects and provision to counseling services like technical and managerial guidance. So technical and managerial guidance, we can see n number of financial institutions we have, where we can take an example of DIC. When you go for DIC, you can able to understand what mechanism you need to do, what type of the business you must need to do, what is the best place for your business, whether it is a right time to start up your entity, the financial advice and management guidance which is going to be given by the commercial banks. Even they are going to be encouraging the entrepreneurs, encouraging the business person, corporates, in terms of providing the valid information with respect to whatever the changes in the interest rate, what time it's the right time for them to borrow the amount, and what is the right time to make a claims, how they do the plan towards taxation and all, everything which is going to be service, whatever the service which are available, all these services are going to be served by the commercial banks. So therefore whenever we speak about the commercial banks and its role on socio-economic development, it is very wider and very vast, where if you take an example of any village today, we can see that every villager, they have a access with the commercial bank account. One or other commercial bank or nationalized bank account they have. And if you take any type of business, every business they are going to be used e-wallets, which is one of the major service by the commercial bankers. And if you take any small shop, petty shops and all, today they are going to use the mobile bankings. So accepting the mobile bankings. So almost the manual work which is almost cut down in the banking sector, and they are completely change the trend into more technically rather than whatever that is existed as a manual work. So today whenever you are visit to any bank without meeting any person, so personless work you can able to do with respect to deposit, with respect to payment, make that everything which is make that very simplified and very transparent system which is included and implemented by the several commercial banks. So therefore whenever you do the business, and you must need to be known what are all the different roles which is achieved by the commercial banks, that is going to be helpful for you towards determining how you can able to start up your business, what sort of the capital formation you can able to do, whether those capital formation which is helpful to you or not, that you can able to decide it. And also you can able to ascertain how the bankers they are going to be planned towards credit creation, how they do provide the all different types of loan. So as an individual, for how many loans you can able to apply, and whether they are going to be get any concession with respect to interest rate, because if they are taken any agriculture loan, as you know that sometimes the government announce that no interest, sometimes the government announce subsidized loan, 50% subsidized, 70% subsidized. Sometimes the corporate, when they took a loan, immediately if they are do the repayment, they are going to get the concession. So therefore you can able to properly plan towards how you can able to take the credit facilities from the banks, and you can do the right investment. So the right investment is the specific thing where it is going to be yield the greater return to your investment. So therefore, as an individual, as a corporate, you must need to know how to convert your cash into effective investment. When you do the effective investment, the rate of return will be very higher. That too, especially in the banking sector, you have a secured return for your investment. So therefore, you can do the investment in the right time and right type of plans you can able to invest it. And also any entity, they can make use of the effective use of resources, full-fledged resources you can able to use it of, and they are going to be encouraging towards new startups, new type of the industries. They are going to be provide the beneficial loans, or they make it liberal in the policies and all, and they are going to be fix the rates, and whatever the rates they are going to be charged, that is also going to be guided by guidelines given by the RBI. So therefore, any sort of business or individual loan or personal loan or a home loan or any different types of loan, you can properly plan towards how you can able to move ahead with the commercial bank roles. And bank monetize the debt. As I said, they are going to properly plan towards how to make a regional balance. So therefore, they are going to plan towards distributing the investment. And bankers play the employers, where they are going to be creating a large number of employment opportunities. When the employment opportunities they are created, obviously they are going to pull more people to their network. So therefore, it is going to be helpful to the individual to increase their individual income, and that will going to be contribute to the national income. Even they can able to increase the purchasing power, and that will be contribute towards the global economic development. So therefore, we can able to achieve from the scratch by providing the greater extent of job opportunities. Everybody there get the job, the standard of living will be improved, earnings will be improved, and they are going to be reinvest, they are going to be make a savings, and again they are going to keep it those savings into deposits, those deposits again converting into loans. So therefore, these the flow will be take place in very smoother way. So therefore, that will be contributing much towards greater extent to the commercial bankers to grow well and to be top number one banks. And with respect to size, with respect to profitability, they can easily enhance the whatever the performance which is with the individual bankers they made. Surely the commercial banks, they are plays a vital role in a social economic development. So once if we conclude it, like once again I will repeat how these commercial banks need to be focused, and they are concentrating towards the socio-economic development. So the first thing is where they are going to create the capital formation. Any business, they can easily pool the funds, and credit creation, they are going to be generate the credit facilities to the customers and the business people, and they are going to be channelizing the right investment. So as an investor, you can do the right investment. Even you can borrow the money and you can able to invest somewhere else, and even you can borrow somewhere else and you can invest here. So that is, you can able to do the right investment plan by having a commercial banks. And they are also helpful to make a full utilization of resources. So that is going to be helpful to the any organization towards coming with the better productivity and encouraging the right type of industries. Sometimes some of the areas we are neglected. Such industries, if anybody concentrating on, for them providing a full-fledged facilities with respect to finance and managerial facilities are going to be served by the commercial banks, and any banker rate policy where they are going to be change the banker rate with respect to deposit rates, lending rates and SRR, CRR, the change in those, that is going to be impact much on the society. And bank monetize the debt, they are going to plan towards how to make it more liquidity and how to provide more funds to the public, and finance to government with respect to purchasing the government bonds and purchasing the treasury bills. They are going to meet the long term requirement and short term requirement to the government whenever they have whenever they need a cash, or whenever they not insufficient funds they feel, whenever those the government they are go for issuing government bonds and treasury bills. By purchasing those through the reserves of the commercial banks, that is going to be contribute to the government for betterment with respect to development and infrastructure. And banker play as an employer, where they are going to be creating a large number of recruitment. So this will be helpful to increase the individual income as well as they are earned people. So therefore it will be boost up the purchasing power, that will result with the economic development of the country. Also they are concentrating on bankers are considered to be entrepreneurs, because for entrepreneurs they are going to be provide the technical, financial and managerial assistance. Hope you understand what is the major role of commercial banks to boost up our socio-economic development. Thank you one and all for your listening. Thank you.